I guarantee you're getting this question. They're going to be like, why would someone want to sell to me now and not get all their money now? Why would they want to wait? And let me give you the classic example that I see all the time. I get a landlord. They've held this property for a long period of time. And so I'll ask them, so do you want to pay the IRS all in 1 year, or do you want to stretch the IRS out over time?
Right.
And the moment they like the idea of stretching the IRS out over time, they've just pretty much filled out half the application to owner finance me.
That's exactly right. Jeff, a question for you. Can you clarify the comment about taxes being paid in advance? And they say, great call, by the way. Thank you, Catherine.
Okay, it's not paid in advance, it's paid over time. Do you want to pay the IRS all in 1 year? Okay, then sell your house right now if you're a landlord, and go ahead. You can pay all of your recapture now, and you can pay all of your capital gains right now. But if you want to sell over time, then I can stretch out that portion you're paying on your capital gains over the amount of time that you want to collect payments.
Exactly.
You're going to have to pay all of your recapture the year you sell, but that capital gains, wow. If I can stretch that over 20 years.
So yeah. The advantage the seller has, Jeff, is what you're saying is the IRS will allow you to take the gain over the 20 years you're collecting the note.
And there's a trick that if I really want to play here, and I'm going to go deep for 30 seconds and I'll pull back, make it an interest-only payment for 5 or 10 years at a low interest rate, and then I have no gain that I'm paying taxes on. I just have a deduction for the interest expense.
Yeah.
That's a good hook, Jeff. That's a good hook.
I just want to make sure everyone understood that on the call. So, Jeff, explain that just a little differently, just to make sure.
So let's do this. So Eddie had a couple that sold to his client Kevin, and I know Kevin quite well. Kevin's a good guy, and they sold for $335,000. Okay, so it was a duplex, which means at least half of it was a rental property, maybe all of it. But that means that when they sold it, they had to go ahead and pay some taxes on it. Now, my taxes are due on the sale from a couple of different reasons. If I've depreciated the property like the IRS requires me to, when I sell for more than what I paid for it, I have to pay tax on the recapture of the depreciation. Don't get hung up on that, because what I want to hang you up on is the gain on the profit is only taxed as I collect the profit. So if for 5 or 10 years, all I'm getting is interest payments with no principal, I'm not getting my profit. I'm not paying a tax on that. Yes, the interest income is taxable to me, but it's taxable to me in one of the most favorable ways possible on my tax return. Okay? The long-term capital gain I just keep kicking it down the road.
Yeah, so one of the things, Don, that I would teach somebody in negotiating this is to negotiate advantages that the seller could get that they wouldn't think up on their own. Right? So if I understand certain elements like that, I do a disclaimer that I'm not an attorney or an accountant, and I'm not, giving tax advice, of course. But then I would continue to say, I think if you'll ask your accountant, he's going to say this is going to limit your tax today and push it to tomorrow. And we all are fairly clear that people love to kind of think they're cheating the IRS a little bit, or at least not having to pay them.
So now Eddie and I have a friend, and I'll just refer to him as Pete. Okay, Eddie knows who I'm talking about. Okay, and one of the things that you learn is how to play by the rules and benefit like mad. Okay, and I want to help. I mean, I look at it this way. When I'm putting together a real estate deal, there are 3 parties to the transaction. There's the buyer, there's the seller, and then there's the IRS. Okay? I want the buyer and the seller to win, and I want the IRS to lose. But I'm going to play by the rules and just take full advantage of them. And you know, it's that concept of I don't want to get my money any sooner than I have to, because am I going to take my cash? Am I going to go down to the bank? Am I going to go make 1% on my money if I'm lucky? By the way, folks, if you look to see what the current 10-year treasury is right now, 0.2%.
It's going to be negative soon.
So if I want to have a negative interest rate, I can go take my money, I can take all my money, pay taxes on it, and go down to the bank and pay negative interest rate. Or I can leave my money in the deal, reduce my taxes, and maybe make an interest income of 4, 5, 6% on that money.
Oh my God, I'm excited.
Eddie's learning something on this call, guys.
No, I'm excited because I'm thinking about the fact that with those market conditions, that is the perfect storm to go sell people to finance you over time at terms and conditions a bank never would.
Right.
That's right. That's
And
right.
that equals a bargain.
How would you like to, Mr. Homeowner, Mr. Home Seller, go lock in a 10-year CD at 6% interest?
Yeah.
What bank will give that to you? Well, I'll give that to you.